I've seen many people talk about this being the bottom of Bitcoin right here, and that bears are waiting for the magic box that might never come for Bitcoin, meaning of course the levels below $60,000. I'm going to discuss this and give you my take here. Now let's go into Bitcoin first of all and see if this is true. Of course, then this would mean that the bottom right here would be at 123 days, and we already had the bottom. Well, does this mean we had the bottom? Well, let's look back in history. We always like to look back at history, right? And this is a very good indicator of what will happen in the future. Look at this. We had the second bull market, and I'm not looking at the first one here because Bitcoin was very fresh at that time. There was not much liquidity, not many people invested into Bitcoin in general at this time, and therefore I'd rather not look at it. So let's start with the second bear market here in 2013. It took Bitcoin 396 days from the top of the bull market to the bottom of the bear market. Fine. Let's go to the second one, 2018, 365 days. Okay, a bit shorter, fine. Let's go to the last cycle, 2022, 365 days again. It looks like we are spotting a kind of a pattern, right? Well, if the same thing is happening again, this would mean we're actually gonna be bottoming out around about 365 days. So that should bring us to here. What does it say? 1st of October, pretty much beginning of October, around about mid-September. And that's also where I think we could see a bottom. Now, fine, let's look into Bitcoin a bit more. Let's go down the time frame and look at the weekly charts. Now, looking at the weekly, first thing I want to talk about here is the 200 simple moving average. Now, that's a very important line. The 200 simply moving average line. So this is the last 200 weeks in this case, because we're on the weekly chart, the last 200 weekly candlesticks. And from history, we can always see that we usually retest this line at the bottom of the bear market, right? You can see here, for example, guys, we saw that we retested it, we went below it, also 2015, and then the third cycle here, we also 2018, we just touched it, we also went slightly below, but we touched it for sure. Last cycle, of course, we went a bit lower actually than the 200 simple moving average, and this cycle, we haven't even touched it yet. There's still a big gap here. And also, that's pretty much it. Look, we can see we touched it every single time. Even last time we went below. This time we have not even gone below it yet. And let's go now into the daily chart. Let's look at what's happening here on the daily. And on the daily, I also want to actually talk about the 200 simple moving average line. Because on the daily, we know that usually the moment we go below above the 200 simple moving average daily time frame, we enter a bull market. So let me zoom out a bit. We can see here, this is, for example, let's go here. This is the cycle 2 cycles ago. We were in the bear market this whole time. The moment we broke above, actually a bit before that, of course, but once we broke above, it was clear to us that we're in a bull market. Fine, let's go to the last cycle. The moment we broke above, we were clearly in a bull market and we stayed above the 200 daily moving average. Right now, we are nowhere near breaking above. If anything, we're most likely going to get rejected again and go further down here. So in my opinion, it's definitely not in a bull market yet. And usually in a bear market, the 200 simple moving average daily acts as resistance. And right now I see it acting as probably resistance again. So next thing I want to talk about is that if I actually go down here a bit more and zoom in, let's put these charts back and see what's happening. We can remove the 200 daily and we can look into Bitcoin a bit more with kind of zooming in a bit more. So what we can see here is obviously that Bitcoin is trading in these bear flag patterns. You can see the first bear flag, first bear flag is right here. We had this bear flag and we broke down. Now again, same pattern and most likely breaking down, being rejected here from the top side, and we did not quite sweep the liquidity or the previous lows, which were here. The previous low was around about 81,000. We didn't quite hit it yet. You know what? I would not be surprised if we do hit it, because you can see that this bear flag pattern is upward sloping. And if I just extend this line a bit, and right now it looks like we went up here yesterday. You see we went up. I wouldn't be surprised if we trade a bit higher above here and actually retest the $81,000 region before then eventually going down. But like, I can't tell you guys if we go down tomorrow or not, but I can pretty much with confidence based on history tell you that we will eventually go down over the next couple of weeks. anytime in the next couple of days to weeks, we will eventually go down, and in like 2 months from now, we will definitely be below the current price. So I would not necessarily buy Bitcoin right now if you are looking to do so. Not financial advice, of course, just what I personally would be doing. And if we then, let me go into the 4-hourly and look at Bitcoin here a bit more. We obviously saw that we were above this major support line. We broke down eventually, and right now we're trading in this range right now, which we had rejected from. Now it looks like we get above it, and we might actually find support here, acts as support, and we go further up, which, like I just previously highlighted, could indicate that we then touch the $81,000 region before eventually going down towards the bottom of the bear flag around 71,000, and then eventually, of course, further down. Now, the next thing to talk about is the S&P 500. The S&P 500 has made new all-time highs over the last couple of days, just high after high. And what I spotted on the S&P is that we always follow the same sort of pattern. Look, we converge to an end point. We have this rising wedge. We converge towards the end, and then eventually we break down. Same thing happened last time. We break down, and then usually we go up for a bit more, and probably the same thing will happen again, whereby we kind of have a descending way up, and volatility goes down. We kind of converge in this triangle, and then we break down. But we can also see we have a bearish divergence. So the RSI, the relative strength index, here on the bottom is downward sloping, while the price is still going up. This usually indicates that eventually we will follow the direction of the RSI, which is downwards, of course. And eventually we know that the markets are so overextended right now. AI companies are really printing at the moment, going to tremendously new highs. The money supply is going up because of money printing going on, specifically, of course, because of the Iran situation to fund wars. And we know that war is one of the main drivers for inflation. Eventually, because interest rates are also high, this is usually not a good thing for the markets. If interest rates lower, then markets will pump. And I personally expect that we will see a slight correction probably in the S&P, maybe something like that happened here in COVID, not as strong, but it could happen. And then once we have eventually then lower markets and then lower inflation, this will allow us to have lower interest rates, which will then eventually again push the markets up. Let's see what the new Federal Chairman Kevin Warsh will do. And I just mentioned that the S&P is really high, and you can see here also the S&P 500 soared to more than 10% in April, its biggest monthly gain since November 2022. So here's 2022 November, and we just had the biggest monthly gain since November 2020. So it's been like 6 years, and eventually we know that all markets correct. Now, next thing to talk about here is this chart. I quite like it. So it's just giving us an idea that we might go again below 60,000, or we touch the $60,000 region. Let's look at the last bear market. Always, whenever I look in the future, I first look in the past. So last cycle, we went down, we had this pattern, we went down, we swept these lows, went back up, and then went a bit further down. And right now, the same kind of thing is happening. We swept the lows here, which also coincides here with this price range that we've been trading in. We went back up, and like I already mentioned, I think we're gonna go down here based on the fact that we have a bearish flag, of course, and that we are nowhere near the 365 days that we usually take. Here we go, 365 days it usually takes to hit the bottom of the bear market, which will bring us to around about October, and we are nowhere near that yet. On top of that, keep in mind, look at these red lines. I mentioned this a couple of videos ago, and right now it's very relevant because this is the 4th of May. And usually on the 4th of May, Bitcoin goes down. Look at this here, 2 seconds ago, 4th of May, Bitcoin went down. Last cycle, Bitcoin went down. Now, 4th of May is coming up in just like 3 days, and most likely it will go down. Also coincides perfectly with the fact that we had a bear flag and now another bear flag, which looks like we're topping out. So if I had to make a prediction, you know what? I think we will go a bit higher. Like I said here, to $81,000 by the 4th of May. Then on the day, go down, probably. Go down, first of all, reach the 60, so this region, the bottom of the bear flag. Maybe at the bottom, get support again, get rejected from here, and then make another final leg down, as we usually do in the bear markets. And you can see the same thing happened last bear market. If I look at this last bear market top, we went up, we had a bear flag pattern, we broke down once. So this is the same thing that happened here, okay? We just compared to the last cycle. Then again, we had another bear flag pattern and we broke down. And this is where we are right now, guys. This is where we are right now. Second bear flag of the bear market, which eventually leads to another second breakdown, which will be here. And then probably, look, another bear flag, third bear flag, which is then the final one, where we eventually find a bottom. So I think we can go down, make another bear flag, and then go down. And around about $50,000 is where I think personally in October we will find a bottom. Last thing to note is this interesting chart I saw, and it's basically saying that Bitcoin has crashed exactly 750 days after every halving event. So we're not talking about the all-time highs, we're talking about the halving, which happens every approximately 4 years. And we can see that, for example, let's zoom in up here. First cycle, it's been 342 days, and after that we crashed. Next cycle, it started to go down, at least didn't go up. We went sideways a few more days, but eventually we crashed after about 750 days. Last cycle also 750 days, we crashed, and now we are at 750 days again. This is not a very strong chart in my opinion, it's just something worth noting. The most important thing, like I said, is that this guy is wrong, first of all. And of course, we are in a bear flag pattern, we're in a bear market. It's only been 40, 50 days now in the bear market. It's not been a full year yet, which it usually takes to find the bottom. Plus, another reason why this guy is completely wrong is that look at the bottom part of his graph. I don't know why he wouldn't have cut this out. This shows us the RSI, the relative strength index, and we're not at the bottom ranges yet. The last time when we found a bottom, we were here. We were below the green line. And the time before that also we retouched the bottom of this green line. I believe this must be the RSI, the relative strength index. And right now, look, we're nowhere near this green line yet. So this means we're not oversold yet. There's a lot more room for people to sell. And usually, based on psychology, if the price goes down, people will panic sell. And that's the best time to buy. Like Warren Buffett says, buy when everyone else, sell when everyone is greedy, and buy when everyone is fearful. And looking at the fear and greed index, I think we're at around about, we're not at super fear right now. We're like at levels of 40 or 35. We want to be at extreme fear or fear levels to be buying. And that usually happens when we're oversold. And that's the best time to buy. Even though everyone is telling you Bitcoin is dead, it happens every single time like that. Every cycle is the same. That's when you buy. When everyone is saying, yo, buy some Bitcoin, we're going to the moon, that's when you sell, of course. And that's the same thing with most asset classes. And with that being said, do your due diligence, buy Bitcoin, buy also stocks, buy gold, diversify your assets. Don't buy meme coins, don't buy other altcoins. You can buy some Ethereum if you want. Ethereum is actually at some nice support right now. Otherwise, let me show you guys Ethereum quickly, because I think Ethereum could be a fairly decent buy. If we look at Ethereum here on the weekly chart, here you can see that Ethereum is actually, let me draw it like this. We have this major support line here over a couple of years, and we're at the bottom side. I didn't draw a perfect straight line, but you get the idea that Ethereum is at relatively cheap levels, and I don't think it will break below this major support line, which it has held pretty much since 2022. Okay, that's enough. See you guys tomorrow. Bye.